NTA blog. Heard loud and clear, IRS postpones implementation of $600 Form 1099-K reporting by a year. On November 21, 2023, an update to the original blog was posted, stating, on November 21, 2023, the IRS issued Notice 2023-74 delaying the requirement for third-party electronic payment networks to report transactions over $600 to the IRS on a Form 1099-K, payment card and third-party network transactions, until 2025. The $20,000 and 200 transactions thresholds remain in place until December 31, 2023, and will then decrease to $5,000 for the 2024 tax year. Note, the rules for reporting income are not changing. Anybody receiving taxable income through third-party networks must still track and report their taxable income. Read the IRS's news release for more details. On December 23, 2022, an update to the original blog was posted, stating, as a result of taxpayer confusion, lack of clear guidance, concerns about the existing backlog, and impact on the upcoming filing season, industry and stakeholders urged the IRS to postpone the implementation of the new reporting requirements of the Forms 1099-K. Good news, the IRS listened, and on December 23, 2022, the IRS issued Notice 2023-10 delaying the requirement for electronic payment networks to report transactions over $600 to the IRS on a Form 1099-K until 2024. Below is the original blog post content. Key points. The IRS is delaying lowering the threshold for Form 1099-K reporting by a year. The $20,000 thresholds remain in place through December 31, 2023. The rules for reporting income are not changing. Anybody receiving taxable income paid through third-party networks must still track and report their taxable income. Why does this matter for taxpayers? A Form 1099-K is an information form typically provided to freelancers or small business owners who receive payments of income from a client via a third-party payment system, e.g., Venmo, PayPal, or Cash App, and it is often considered self-employment income. However, with the convenience of Venmo, PayPal, or Cash App, many individuals pay personal expenses, as well as payments associated with goods and services with these apps. For example, think about a group of friends who regularly has lunch or dinner together and one person pays the bill. After the meal, the friends send reimbursement through Venmo. Unless the account or payment is designated as personal, it will trigger a reporting requirement if the annual amount exceeds $600. The person receiving the funds could receive a Form 1099-K, and the IRS will expect to see that income reported on his or her tax return. Payments incorrectly classified as business, goods, or services will trigger a Form 1099-K. If a taxpayer believes it is not taxable and does not include the amount on his or her tax return, it will create a mismatch with IRS systems, potentially triggering an IRS notice of adjustments and penalties. If not taxable, taxpayers will be required to provide support as to why the payments should not be included in income. Lowering the threshold from $20,000 to $600 substantially increases the number of Forms 1099-K that will be issued. The postponement should provide taxpayers additional time to familiarize themselves with the rules and, more importantly, to properly identify personal versus business payments to prevent misidentified payments being reported on a Form 1099-K at year-end. What does this mean for tax year 2022 filings? Companies such as Venmo, PayPal, and Cash App, known as third-party settlement organizations, TPSOs, are required to provide annual Forms 1099-K to the IRS and taxpayers. In March 2021, Congress modified the requirements for reporting these transactions by lowering the minimum reporting threshold to any amount over $600 for one or more transactions, beginning in 2022. Prior to the change, companies were required to report transactions for a payee if, 1. they exceeded $20,000, and 2. the number of transactions with that payee exceeded 200. The notice creates a transition period of 1 year, postponing the $600 Form 1099-K threshold until the January 31, 2024 reporting date.